Have you ever heard the term stock split and wondered what it means? Well, it's a common occurrence in the stock market that can benefit both companies and investors. Simply put, a stock split is when a company divides its existing shares into multiple shares. For example, if a company has 1,000 shares of stock valued at $100 each, and they decide to do a 2-for-1 stock split, the number of shares will double to 2,000, but the value of each share will be cut in half to $50. But why do companies choose to do stock splits? Well, one reason is to make their shares more affordable and accessible to a larger group of investors. For instance, if the company in our example had a stock price of $1,000 per share, it might be too expensive for many individual investors to buy. However, by doing a stock split, the price per share becomes more affordable, and more people may be able to invest in the company. Another reason companies may choose to do a stock split is to increase liquidity, or the ease of buying and selling shares. By increasing the number of outstanding shares, the stock becomes more liquid, which can make it easier for investors to buy and sell shares quickly. From an investor's standpoint, stock splits can also be beneficial. While the total value of an investment in a stock split remains the same, investors may be able to purchase more shares at a lower price, potentially increasing their overall returns. Additionally, stock splits can signal positive news for a company, as it may indicate that the company is growing and performing well. In conclusion, stock splits are a common occurrence in the stock market, and they can benefit both companies and investors. By dividing existing shares into multiple shares, companies can make their shares more affordable and accessible to a larger group of investors, while also increasing liquidity. And for investors, stock splits can potentially increase their overall returns and indicate positive news for a company. So next time you hear the term stock split, you'll know what it means and why it matters.